Hi, this is Akebia with the US Chartbreakers here at Zach's Traders Cafe for Sunday, the 16th of March. Starting off with the S&P, where we're hoping that this is the low of the move, i.e. down towards the 5,500 zone. 5504 the low there, and support line projection there from December, and a bit of bullish divergence there as well, suggests that we might as well, or we might be able to get back towards the 5700 level, which was the support back in October, November. Even if we then fade away after that, you can see it was a rather nasty multiple top there for the market going into the end of February. On the downside, worst case, I suppose, at the moment would be a fresh leg down towards 5,400, but the call here is that the worst is over, which is clearly quite a punchy call at the moment. Moving on to the Nasdaq 100, which obviously suffered a similar fate. That triple top there was an island reversal there, and then a bull trap after that. So this market really trying to fox the bears there, getting rid of the bears before the plunge. And current situation is that we've basically bear trap from below the late September support there, around 19,300. At least while we're above that, looking for a return not only to the 19,700, which is just above us, but maybe back towards the 20,300 area, which was November to February support for this market. Again, an element of bullish divergence there, and that is the reason for calling the low, at least a near-term low for this market. On to the stocks, and starting off with one which I don't think I've looked at before, but Applied Opto Electronics is the one, and here we've had double gaps higher and closing just near the old support there, the pre-March support for this market around $23.50. End of day close above that, and we could be looking at the top of the falling trend channel from November, just towards the $31 area, hopefully by the end of next month or even sooner. Another interesting situation from Akebia rather, and here managed to get a very sharp bear trap from below, bear trap rebound from below $1.70. That was basically post-November support for the stock. A horrible follow through there towards $1.50, and then a gap close buy signal to end the week with a rising 50-day line, rising trend channel there from basically the middle of 2024, the early part of 2024, top of the channel there, heading for $2.65, and one would expect that after wrong footing the bears so badly below $1.70, we will at least head up to the top of that channel, and that would hopefully then be a springboard for further gains for this stock. Stock which we are familiar with, D-Wave, and here beautiful setup in the sense that we had the gap down, or the gaps down back in January, and then the gap higher for the the last week or the end of last week. That's a bear trap island reversal, which tends to be particularly strong where it's at the higher end of the range rather than the lower end of the range. Top of the channel there heading for $12.30, and that should be the minimum for the shares by the end of this month, or hopefully even by the end of next week. Ideally, we stay on the right side of the middle resistance there around $8.20 ahead of a push towards the $12 plus zone. Interestingly named company called Desktop Metal, and it's a classic potential turnaround situation after an extended bear run. Here you can see we're potentially in a broadening triangle base, and a bear trap rebound from below the old January support there around $2. And above especially above the 50-day line at $2.37, looking for the top of the triangle there, $3.26. Bullish divergence line as well going into the last turnaround, so that should give this situation extra momentum. You can see that the 50-day line is quite important because we haven't been above that since back in November, so quite a good significant change there. We are familiar with Gorilla, and here we've got this rising trend channel, a steep one, and rather volatile all the way, but at least we have bounced off the floor of that channel from back in October. The level around the $25.50 level, which is basically $25.30, the low on Friday, and above that looking for the top of the channel as high as $52 by the end of next month. Nice bounce for the RSI around the neutral, double bounce for the RSI on the neutral 50 level. We also had one of those at the end of last month, so that worked, and we're assuming this will work too. Another strong situation to take a look at, and it's Huachen, and here you can see that very much charting data here, and that makes it even more fun in terms of trying to guess what the upside might be, or what the parameters of the rising trend channel may be. We had an unfilled gap to the upside on Friday, and at least while we're above previous resistance around $6.20 in the floor of that channel, then we are looking for a move as high as $12.50, maybe by the end of next month, hopefully rather sooner than that. Ideally, that would be hit by the end of this month. Let's see if that particular rather blind call works for that stock. Moving along to HF Foods, and here looking for a recovery. It's a bear trap gap reversal, one of our favorite setups. There's also bullish divergence there as well, so a lower low for last week, but higher RSI trace. So above the middle of that basically W-shaped formation there at around the $2 mark on an end-of-day close basis, looking for the top of that triangle, $2.90 by the end of next month, or sooner than that. Initially, I suppose over the next week would be disappointed if we didn't get up to $2.50 and that 50-day moving average. JL is next, and J Long is the name of the company. Here we've got a rising trend channel base. Top of the channel they're heading for $6.90. We're looking for that by the end of next month, especially while we remain, or while we stay above the 50-day moving average. Didn't quite, well, we did quite close above it on Friday, and that rising close there should mean that we've got extra momentum for a move towards the $7 area. In fact, you could argue that the channel rather, is rather higher than the one I drew initially there, but let's go for a conservative move there towards $7 plus by the end of next month. Moving along to Kingstone, and here bear trap gap reversal again from below the February support there. That was around $14.50. Above that, looking for the top of the channel, which has been in place since the end of October, up to $20.30, and looking for that by the end of this month, given the speed of the move on Friday. Another stock to keep an eye out on, or keep an eye out on, is quantum computing, a rather trendy subject at the moment. And here you can see that we've had a bear trap reversal from below the old December-January support area. Above that, around $6, looking for the top of that falling triangle there as high as $12, and looking for that to be hit by the end of next month. Moving along to the last two, and the first one is Rigetti Computing, which has broken out of its triangle there. That's been in since December. $9 the breakout level, an end-of-day close above the 50-day line at $11.56 could take us up to $22 as soon as the end of next month. Finishing off with the cleverly named Rubrik, and here you can see that we've had, we've certainly caught out the bears. They were looking the other way on Thursday, looking for a test of the $51 support area, but instead they got smashed in the face. Closed above the 50-day line there at $68.08. And the longer we stay above Friday's support there, $64.80, the greater the chance of a move up to $81 plus by the end, hopefully the end of this month. But the key is putting in as many days as possible above the 50-day line. That's it for me today. More updates very soon.